so that you mute that again. Just remember, guys, that you must add your student number in the chat. Have your calculator and your notes ready for today's session. The notes has been emailed to you. If not, if you haven't got that, then you can go to your Teams, and the notes is also uploaded there. Today we are working on the notes that is called lecture number 8. So if you haven't got the notes, go to the Teams, and there's an icon for notes. Just click on there and look for lecture number 8. If you've got any technical queries, any technical issues, please don't ask it here. Just like send an email to ctntat@unisa.ac.za, and they will come back to you and help you to resolve the issue. At the end of the session, please complete the feedback form. The feedback form is also under Teams. It's the icon next to the notes. There's a feedback form. So we will appreciate it if you can complete that and forward that then to us. Right, guys, we are moving into today's section, which is lecture number 8. And in lecture number 8, we deals with the concept called asset realization. Now, when we talk about asset realization, we are referring to the sale of an asset. So the sale of an asset, we are either selling a building, or we are selling equipment, or we are selling furniture, or we are selling vehicles, and all the transactions associated with that sale. So we are working here with the non-current assets and the transactions that must be concluded whenever we are selling this particular asset. We are going to our notes now, guys. Okay. But guys, I hope you can see that now. So we are dealing with a section, study unit number 11, that deals with property, plant, and equipment. And we are taking a look at asset realization. Right. This section of the curriculum, guys, deals with the selling of non-current assets. So we are going to take a look at what transactions must be recorded in the books of the business whenever you are selling a non-current asset. It can be vehicles or equipment or a building. So vehicles, equipment, machinery, furniture, all of that, that is what we're talking about here. If you are faced with a question on asset realization, guys, the examiner can ask you journal entries to record the asset realization. They can ask you to do ledger accounts, and they can ask you the note for the property, plant, and equipment. So in today's lecture, we are going to go through all of that, guys, and we're going to apply that now to a question, an example that we will work through. On page 1 of your notes, guys, I've got a table there where I have got the steps to follow with asset realization. And there are basically 5 steps with asset realization. On the table that you see there, I have indicated 6 steps, but step number 6 is only going to happen at the end of the financial year. We are just working with the steps for asset realization, and there are 5 steps involved here. Right, in step number 1, you must calculate and record the additional depreciation on the asset from the beginning of the year to the date of the asset realization. Now, all of this I will explain to you guys when we are actually going to do the exercise, then you will see how we are going to follow the steps. In step number 2, you transfer the total accumulated depreciation on the asset on the date of the asset realization. You transfer that to an account called the asset realization account. Now, let me just speak about the asset realization account quickly. When we talk about the asset realization account, guys, it is not an account that you can place in terms of, is it an asset, is it equity, is it liability, is it income, is it an expense? This is only an account that is listed. We call these type of accounts intermediary accounts. It's an account that is only there to assist you with the asset realization, with the sale of the asset. So after the asset realization has been done, then that account will also vanish out of the books of the business. So that account will balance and it must be closed off, and you're not going to work again with that account until you get your next transaction where you sell again an asset. So the asset realization account, it's an account that is created just to assist you with the actual sale of the asset. So guys, when we now talk about our next step now, in your next step, you transfer the cost price of the asset to the asset realization account. Now, step number 4, you take a look at how did you sell your asset. You want to know, did you sell your asset for cash? Did you sell it on credit? Or in the third instance, you can also trade your asset in. Those are the 3 methods that we use for asset realization. You can either sell your asset for cash, which means that the bank account will be involved, or you can sell it on credit. Then you're going to work with your trade receivables control account. Let me just change that. That's trade receivables. Remember, somebody that's owing you money. And if you trade it in, you work with your trade payables account. That is your trade payables account. Okay. And in step number 5, you calculate to see whether the business has made a profit or a loss on the sale of this asset. And this is the 5 steps with asset realization. Guys, the steps I'm going to explain to you now via our example that we have got here. In your example, guys, the following information was taken from the books of Surrey Stores on the 31st of December 2017. On the 1st of January 2017, which was the first day of the financial year, your vehicles was 360,000 Rand. That is all your vehicles together. And the accumulated depreciation had an opening balance of 104,000 Rand. That is the accumulated depreciation on all your vehicles. Additional information. A new vehicle was purchased for cash on the 1st of July 2017. Depreciation must be provided for at 20% per annum on the cost price. And an old vehicle with a cost price, of 140,000 Rand and accumulated depreciation of 48,000 Rand. And that is the accumulated depreciation on the 1st of January. So that is your accumulated depreciation at the start of the financial year, and it was sold for cash. Those are the important things that we are looking for. It was sold on the 1st of October. So the 1st of October is your date of your asset realization, and it was sold for 80,000 Rand. So guys, your transaction under number 3, where we are selling an asset on the 1st of October, that is your transaction which involves the sale of this vehicle. Therefore, that is your asset realization transaction on the 1st of October. Right, guys. Now, just please turn now to your notes. I've also sent you something that deals with the explanation for lecture number 8. Let us take a look at how we're going to deal with that. So whenever you are faced with a question like that, guys, always on the timeline, put down your financial year. So your financial year, the beginning of the financial year was the 1st of January 2017. The end of the financial year is the 31st of December 2017. And the date of the disposal, the date of the asset realization, we are selling this asset on the 1st of October 2017. That is important. Okay. So let us focus now on the asset that we are selling. From your information under number 3, they tell you that the vehicle that we are selling had a cost price of 140,000 Rand. And there was accumulated depreciation on the 1st of January, the first day of the financial year. Accumulated depreciation amounted to 1,000 Rand. So the carrying value, remember carrying value is cost minus accumulated depreciation, and your cost minus your accumulated depreciation will give you a carrying value of 92,000 Rand. That is the carrying value on the 1st of January 2017. But we are not selling the asset on the 1st of January. We are selling the asset on the 1st of October. Now, from the 1st of January up until the 1st of October, which is a 9-month period, January, February, March, April, May, June, July, August, September. Can't count in October, only up until the 30th of September. That is a 9-month period. For that period that I've indicated there in the red, for that period, we have used the asset in the business. And for that period, there will be additional depreciation. So you must now calculate the additional depreciation for that period. That is the depreciation since the start of the financial year to the date of the asset realization. Your depreciation must be calculated at 20% per annum on the cost price. So if you are going to calculate the depreciation, you will say 140,000 Rand times 20%, but only for 9 months, because you use the asset only for a 9-month period. Do the calculation, 140,000, 20% per annum for a period of 9 months will give you depreciation expense of 21,000 Rand. So for that period, your depreciation expense for that 9-month period is an amount of 21,000 Rand. So now we focus on the 1st of October. This is now the date of the asset realization. The cost price of the asset cannot change. We are talking about the purchasing price of the asset, and the asset was purchased for 140,000 Rand. Now accumulated depreciation. Now your accumulated depreciation on the 1st of January was 48,000. However, you have used the asset for another 9 months. So On the 1st of October, which is the date of the asset realization, your accumulated depreciation is now the amount of 69,000 Rand. Accumulated depreciation is now 69,000 Rand. That is now your accumulated depreciation at the beginning of the year, plus the depreciation for another 9-month period, and that will give you 69,000. 69,000 is therefore the 48 plus the 21. So on the date of the asset realization, the carrying value of your asset is now 140,000 minus 69,000. That is the carrying value of the asset. The carrying value of the asset on the date of the asset realization. So, in my next block, I've got there for you. The carrying value of the asset is now 71,000 Rand. The selling price, remember, back to your question now. They tell you now that the selling price was 80,000 Rand. So we are selling the asset for more than the carrying value. Therefore, we have made a profit. And we have made a profit then of 9,000 Rand. The profit that we have made now with this transaction is 9,000 Rand. So guys, let me just quickly summarize what has happened on the transaction and how you must do your calculations. Right. First of all, put down your timeline so that you can know exactly what you are dealing with here. So the beginning of the financial year was the 1st of January 2017. The end of the financial year is the 31st of December 2017. We are selling the asset on the 1st of October, 9 months into the financial year. Therefore, your accumulated depreciation at the beginning of the year was given to you. But in that 9-month period, there will be additional depreciation. And your additional depreciation, you calculate. The rate of depreciation is in your question. So you will take the cost price because it's on the straight line method. You will take 140,000 at 20% per annum for 9 months. And that will give you additional depreciation of 21,000 Rand. So on the date of the asset realization, on the 1st of October, the cost price of the asset that you are selling is 140,000, but your accumulated depreciation on that asset on the 1st of October is now 69,000 Rand, which is the 48 plus the 21. Resulting now in a carrying value. Remember, carrying value is cost minus accumulated depreciation. And your carrying value, therefore, is 71,000 Rand. Now you know, on the date of the asset realization, you sold an asset, and that carrying value of that asset was 71,000. Go to your question to see what is the selling price. And we sold this asset now for 80,000 Rand, resulting in a profit of 9,000. If we had to sell the asset below the carrying value, the business would have realized a loss on sale of asset. But in this case, since we are selling it now for more than the carrying value, we will now record this now as a profit on sale of the asset. Alright guys, that is the explanation. Now I'm going to go and record that information now into the books of the business. I'm going to do it via the ledger accounts, and I'm also going to do it now via your general journal entries. And to do this now, I am going to apply the steps from number 1 to number 5, the steps for asset realization. Right, guys, let us first of all take a look at our information that we've got. As far as our ledger account is concerned, we are saying 2017 on the 1st of January, our vehicle account started off with an opening balance, and all our vehicles together was the amount of 360,000 rand. We also know from our information that our accumulated depreciation account, accumulated depreciation, just get that right there. Guys, you've got the answer sheets. I've sent you that, so you will see there. Accumulated depreciation will have an opening credit balance, 2017, January 1st. And on the 1st of January, our accumulated depreciation started off with an opening balance. The opening balance in that account was 104,000 rand. That is the balance on the first day of the financial year, and that is the accumulated depreciation on all our vehicles. In your additional information, guys, additional information under number 1, we had another transaction involving vehicles, and that was on the 1st of July. And on the 1st of July, we bought another vehicle, and we bought that vehicle for cash. Your vehicles will increase. You debit your vehicle's account with bank, and we bought a vehicle for 160,000 rand. So as far as that entry is concerned, on the 1st of July, we bought a vehicle for 160,000 rand. Right. Now I'm going to record the transactions now that happened on the 1st of October, the transactions for the 1st of October. Now, on the 1st of October, that is when we sold our asset. And whenever you are selling your asset, guys, this is asset realization. So we are going to follow the steps with asset realization. Now, in step number 1, for your asset realization, guys, step number 1, I say, you must now record the additional depreciation. To record the additional depreciation, the journal entry, debit depreciation, and you credit your account related depreciation on vehicles. Debit depreciation, credit accumulated depreciation on vehicle. So your journal entry then, guys, debit depreciation, credit your accumulated depreciation, and the amount is the extra depreciation of 21,000 rand now. Debit depreciation and you credit your accumulated depreciation. Right, guys, that is your journal entry. I'm going to take that journal entry now and show you how we will record that in your ledger. So go to your ledger account. In your ledger account now, you do exactly what you have done now in your journals now. You will debit your depreciation account. 2017, that is on the 1st of October. You debit your depreciation with accumulated depreciation on vehicles, and the amount is 21,000 Rand. And your accumulated depreciation, remember now this transaction happens now on the 1st of October. You credit this account then with depreciation and the amount is 21,000 Rand. Okay, guys, that is to account now for step number 1. And step number 1 is where you must now record the additional depreciation by debiting depreciation. Your depreciation account must have a debit entry, and your accumulated depreciation on vehicles account must have a credit entry, and that is to account for the additional depreciation. When I speak about the additional depreciation, guys, I'm referring to the depreciation from the beginning of the financial year up until the date of the asset realization. That is my additional depreciation. Right, guys, I'm on to step number 2 now. Step number 2. In step number 2, I transfer the accumulated depreciation on the asset. The total accumulated depreciation on the asset, I transfer that to the asset realization account. So let me now first of all just explain to you guys the method there, or why we are doing it like that. Right. So go to your ledger account now, your ledger account for the accumulated depreciation. And if you go to this ledger account now, you will see that this is now the accumulated depreciation on all our vehicles. However, if we are selling one of our vehicles, we don't have that vehicle anymore, your accumulated depreciation will of course now decrease because you don't have that particular vehicle anymore. Remember now when we talk about accumulated depreciation, in your ledger account for accumulated depreciation, this is the accumulated depreciation on all our vehicles. So if we are selling one of our vehicles, we will have to decrease accumulated depreciation because we don't have that vehicle anymore. So in your journal entry now, you will debit your account accumulated depreciation on vehicles. Remember, accumulated depreciation on vehicles must decrease. You debit accumulated depreciation on vehicles, and you credit your account asset realization. Remember, this is the new account that I explained to you guys earlier. This is the account that is created just to deal with the sale of the asset. And your accumulated depreciation on the asset that we are selling is the amount of 69,000 Rand. Accumulated depreciation, guys, is 69,000 Rand. We are transferring in this step the total accumulated depreciation on the asset on the date of the asset realization. We transfer that to the asset realization account. Accumulated depreciation must decrease. That is why we debit our accumulated depreciation account. That's the journal entry. We go back now to the actual ledger. Accumulated depreciation on vehicles will be debited. 2017. This all happens on the 1st of October. And we debit our accumulated depreciation account with asset realization. And the amount is 69,000. The total accumulated depreciation on the date of the asset realization. Your asset realization account must have a credit entry. 2017, the 1st of October, you credit this account then. With accumulated depreciation on vehicles and the amount is 69,000. Okay, guys, that is step number 2. We transfer the entries now. We transfer the total accumulated depreciation written off on the asset to date. To date, we have written off. The 48,000 was written off as on the 1st of January. There was a further 21,000. So we are writing off 69,000 Rand. That's the total amount of accumulated depreciation written off. Step number 3, guys. In step number 3, we take a look at the cost price of the asset. Now, if you go to the vehicle account, you will see that the vehicles we started the year with 360,000 Rands worth of vehicles. We bought another vehicle for 160,000 Rand. But we are selling a vehicle. And because we are selling a vehicle, the vehicles will decrease. So you must credit your vehicle account with the cost price. So back to our journal entry now for step number 3. If we are going to record now the sale of the vehicle, we will say debit your account asset realization, and you credit your vehicle account. Debit asset realization, credit vehicle. We will have to credit the vehicle account because your vehicles decrease. You're selling a vehicle. And this step, guys, deals with the cost price of the asset. And the cost price of the asset is 140,000. Cost price of the asset, 140,000. That is the journal entry. To record that entry in my ledger now, I will say my vehicle account 2017 on the 1st of October, I will credit my vehicle account here with asset realization with the amount of 140,000 Rand. And my asset realization account must have a debit entry. 2017, October the 1st, I debit my asset realization account with vehicles. And the amount of the cost price is 140,000 rand. Okay, guys, that will take care of step number 3. Just to summarize again, guys, where we are now at this point in time. We are now recording the transactions on the 1st of October. On the 1st of October, we sold an asset. So whenever you are selling an asset, you are dealing with the concept called asset realization. So when we record now our transactions now for asset realization, you must be able to do the ledger as well as you must be able to do the entries in your journal. So if you record the entries now, can we just ask Sandukani? Sandukani, can you please just mute your mic, please?
Oh, sorry, sir.
Okay, right. So guys, so we are now going to record our transactions now. As I pointed out earlier, you must be able to do the entries in the ledgers as well as in the journal, because they can ask you journals or they can ask you ledger accounts. To record the entries now, you follow the steps with asset realization. Step number 1, account for additional depreciation. Debit depreciation, credit accumulated depreciation. Step number 2, now you transfer the accumulated depreciation written off to the asset realization account. Debit your account, accumulated depreciation. Accumulated depreciation must decrease. Accumulated depreciation decrease on the debit side. That's why you debit accumulated depreciation and you credit your asset realization account. In step number 3, you record now the transfer of the cost price. The vehicles is an asset with a debit balance. If we are selling one of our assets, your vehicles will decrease. That's why you credit vehicle account and you debit the asset realization account. Okay, guys, that's the first 3 steps we have completed now. We continue. And I am now going to go into my step number 4. Now, step number 4 with the asset realization, you are taking a look at how did we dispose of this asset. Remember, we can sell the asset for cash or on credit, or we can trade it in. In this example, go back to your trial balance now. You will go back to your information, and in your information, you will see that they are telling you that you are selling the asset for cash. And because you're selling the asset for cash, you will debit your bank account because the money in the bank will increase. And we sold the asset here for 80,000 rand. Debit the bank account, credit your account, asset realization. Remember, asset realization, for every transaction, there are 2 accounts involved. Asset realization will always be the one. In step number 2, when we transferred the accumulated depreciation, the other account was asset realization. It was an entry between accumulated depreciation and asset realization. When we are when we are transferring the cost price, debit asset realization, credit vehicles. It was an entry between vehicle and asset realization. Now we're selling the asset. It's an entry between bank and asset realization. So asset realization will always be one of your accounts. Just complete that now, guys. Step number 4, we take a look at how we sold the asset. Take a look at the selling price. We record the selling price, debit the bank account, credit asset realization, and the amount is 80,000 rand. To record that now, of course, now guys, into our ledger now, Go to your ledger account. The bank account will have a debit entry. I'm not going to show that entry because the bank account is not required here. Your asset realization account will have a credit entry bank now, and the amount of the bank is 80,000 rand. Okay. For the purposes, guys, of the double entry system, your bank account will have a debit entry. However, in this question, they didn't ask you to do the bank account. So I'm not going to show that entry on the debit side of the bank account, but in my asset realization account, I've got a credit entry for bank 80,000. Okay. Now the last step, guys, the last step with asset realization, we must calculate now to see whether we have made a profit or a loss on this transaction. Now remember when we started off and we had that calculation there, I showed you that the carrying value of the asset is now 71,000. We're selling it for 80,000 rand, and there was a profit of 9,000 rand. I am now going to record that profit now. To record that profit now, guys, whenever you are dealing with a profit, the two accounts involved will be profit on sale of asset and asset realization. Remember, asset realization is always the other account. So it's an entry between profit on sale of asset and asset realization. Profit on sale of asset is an income account. Income accounts increase on the credit side. So I will have to credit my account profit on sale of asset, and I debit my account asset realization. Okay, so let me just explain that concept to you. If you have made a profit on the sale of the asset, a profit is income. Income accounts increase on the credit side. So then you must credit your account profit on sale of asset, and you debit your account asset realization. This is the last step now with asset realization. If, however, you have sold the asset and you have made a loss, you sold it at less than the carrying value, and you have made a loss. Loss on sale of asset is classified as an expense. Expenses increase on the debit side. So to record this entry in the books of the business, you debit your account loss on sale of asset, and you will credit asset realization. Remember, it's always asset realization is one of the accounts. And we have made a loss, then you will debit loss on sale of asset. However, in this exercise, we have made a profit. So if we are going to record the entry now, credit your account profit on sale of asset, and the amount is 9,000 rand. At your asset realization account, you will debit now 9,000 rand. That is the entry to record now. Step number 5, which is you are now recording the profit or the loss on the sale of the asset. I take this information now to my ledger now. I will have to debit my asset realization account with profit on sale of asset, and the amount is 9,000 rand. And I will have an account called profit on sale of asset, and that account must be credited. I will have to credit that account. However, that account is not required, so I'm not going to show that account now in my ledger. So guys, that will take care of the first 5 steps, the steps with asset realization. Just to recap again, step number 1, calculate and record the additional depreciation. I'm referring to the 21,000 Rand. In step number 2, transfer the accumulated depreciation on the asset to date to the asset realization account. You debit accumulated depreciation and you credit your asset realization. Step number 3, you transfer the cost price, debit asset realization, credit your vehicle account. In step number 4, you take a look at how did we dispose of the asset. In this case, it was for cash. Debit the bank account, credit asset realization. And next step, you calculate to see whether you've made a profit or a loss. In our case now, we made a profit. Credit profit on sale of asset. Because remember, profit is income. Income increase on the credit side. You must credit your account. Profit on sale of asset. Right, guys, that is the journal entries. That is what your ledger account will look like, your ledger accounts. And now your asset realization account, guys, must balance. This account now must balance. So you add up your debit side. You add up the debit side here. And if you add up your debit side, guys, you will get 149,000 Rand. And if you add up your credit side here, you will get your 149,000 Rand. You will see that your asset realization account must close off. The debit side must be equal to the credit side. If the debit side is not equal to the credit side, guys, you have made a mistake somewhere. So guys, I'm done now with your transactions now that happened on the 1st of October. On the 1st of October, we sold an asset. So we have applied the 5 steps there of asset realization. Back to our explanation now again, guys. And if you go back to your notes now, there is a step number 6. Which deals with the calculation of depreciation at the end of the financial year. Now, let me first go through with you guys and show you how we are now going to calculate the depreciation at the end of the financial year. Your vehicles, guys, you divide into 3 categories. You call it old, sold, and new. When we talk about new vehicles, guys, we talk about the vehicle that was purchased during the course of the year. And you will recall that we bought a vehicle. That vehicle was purchased during the course of the year. It was purchased on the 1st of July. And that vehicle was purchased for 160,000. The vehicle that we sold is the one where we had to work out the asset realization, the asset that we sold, and the information under number 3 tells you that that vehicle had a cost price of 140,000 Rand. So you need to understand now, guys, that the old vehicles must be the amount of 220,000 Rand. Okay, guys, so let me just quickly explain that one to you. You will recall that at the start of the financial year, go to your vehicles. All our vehicles amounted to 360,000. However, a portion of that vehicle was sold. The vehicle that we sold had a cost price of 140,000 Rand. So the remaining vehicles, the vehicles that we are still left with, that is the 220,000. So we can refer to that as our old vehicles, or sometimes people also refer to that as our remaining vehicles. Okay, that is the vehicles, guys, that we have started the year with. All that our old vehicles or our remaining vehicles. So if we are now, guys, going to focus on our calculation for depreciation, you must have 3 sets of vehicles. Old vehicles, vehicles that were sold, and our new vehicles. I've calculated now and show you where we got those amounts from. 220,000 for our remaining vehicles. So if I am going to calculate my depreciation on my remaining vehicle, my depreciation will be 220,000. Remember, the rate is 20% per annum on the cost price times 20 divided by 100. And my depreciation on my remaining vehicles is an amount of 44,000. Take the 220,000, calculate your 20% on that, and your depreciation on your remaining vehicles, on your old vehicles, is 44,000. The depreciation on the vehicle that we sold, we worked this out already. It was 140,000 at 20% per annum. But this vehicle we only had for 9 months, and you will recall that we have recorded this as 21,000. That was the depreciation on the vehicle that we sold. That vehicle we only had for 9 months of the year. The new vehicle was purchased for 160,000 rand. So if we calculate the depreciation on the new vehicle, it will be 160,000 at 20% per annum. The vehicle was purchased on the 1st of July, and we had this vehicle only for 6 months from the 1st of July onwards, and that will give you a depreciation expense of 16,000 rand. 160,000 rand at 20% per annum for a period of 6 months will give you depreciation of 16,000. So if you must record your depreciation now and or calculate your total depreciation on your old vehicles, 44,000. On the vehicle that you sold that you only had for 9 months, 21,000. And on the new vehicle, it will be 16,000 rand. And therefore, your depreciation expense for the year, is an amount of 81,000 rand. 81,000 rand. That is the calculation for depreciation, guys. I am now going to record my depreciation now. And this, remember now, guys, is at the end of the financial year. At the end of the financial year, I am now going to record the depreciation in the books of the business. When you record it now, you debit your account depreciation and you credit your account accumulated depreciation vehicles. This is on the 31st of December, and you debit your depreciation account. But important now, guys, let me just quickly show you. Remember, we've got 3 categories: old vehicles, vehicles that we sold, as well as the new vehicle. Now that 21,000 rand, that depreciation, we recorded already You recall that that was under step 1 with the asset realization. We recorded that already on the 1st of October. So now at the end of the financial year, we have recorded the 21,000 Rand already. Now we must only account for the remaining items. And we have got old vehicles where we wrote off 44,000, new vehicles where we wrote off 16,000. So when we speak about accumulated depreciation or provide for depreciation at the end of the financial year on the remaining vehicles, it is only the 60,000 Rand that we must account for. Just to bring that message across to you guys, if we must account for depreciation, we have calculated the depreciation expense. And the depreciation expense for the year is 81,000 Rand. However, we have recorded the 21,000 Rand already. Therefore, the depreciation on the remaining items, therefore, is 60,000 Rand. Is the old plus the new. So if I'm taking that information now to my ledger, can also see there that the 21,000 Rand has already been accounted for. So on the 31st of December, if I now account for my depreciation, I debit my depreciation account, I credit my account, so I debit my accumulated depreciation account. And the amount is 60,000 Rand. And I credit my accumulated depreciation account on the 31st of December with depreciation and the amount of the depreciation is an amount of 60,000 Rand. So that is the entry in the journal, guys. And that is what the entry will look like in my ledger. So I'm done, guys, with all of these accounts now. I will now balance these accounts. So your vehicle account will now have a new balance carried down at the end of the year. Your balance carried down now, guys. If you add up here, add up your debit side, you will have 520,000. And on your credit side, also 520,000. And you will now have a new balance here in your vehicle account, guys, of 380,000 Rand. So in the new financial year, guys, and the new financial year, which will now be 2018, on the 1st of January, you will start with a vehicle account, and the vehicle account will have a new balance, and the balance in your vehicle account is the amount of 380,000 Rand. 380,000 Rand. That is what your vehicle account will look like. Just to summarize your vehicle account, remember we started off with 360. We bought a new vehicle for 160. We sold the vehicle with a cost price of 140. And the new balance now that we will start off the new year is an amount of 380,000 rand. Your accumulated depreciation account, guys, accumulated depreciation, we're going to balance this account now. You're going to add up your credit side and subtract it from your debit side. The difference will be on your debit side. That is your balance carried down now. You add up your debit side, your credit side, because your credit side is just so much more. It's 104,000 plus 21,000 plus another 60,000, and that will give you 185,000 as a total. R185,000 as the total there. The balance carried down, the difference between the two sides now is an amount of 116,000 rand. So you will start the new year 2018, the 1st of January, and your accumulated depreciation on vehicle account will start the year with a new balance carried down on balance brought down. Sorry, that's balance brought down. We start the year balance brought down, and my amount is 116,000 rand. We'll start the year, guys, with a new balance there of 116,000 rand. Your depreciation account, to balance depreciation. Depreciation, remember now, is a nominal account. It's an expense account. So to close off an expense account, we don't balance this account at the end of the financial year. We close it off. We close this account off by transferring it to the profit or loss account. Remember, this is a nominal account. Nominal accounts we don't take into the new financial year. It must be closed off and transferred to our profit or loss account. And this account, guys, will close off then. You will have to transfer the expense of 81,000 rand to the profit or loss account. And your expense for the year, the 81,000 rand, you transfer that to your profit or loss account. So in terms of balancing these accounts now, guys, at the end of the financial year, remember the asset realization account is closed off. Depreciation account, we close that off. We transfer that to the profit or loss account. And accumulated depreciation on vehicle account, we calculate the balance there. And your vehicle account, you will calculate the balance there. So balance the vehicle account, balance your accumulated depreciation account, guys, and that will take care of the entire asset realization process, the recordings in the journal, as well as the recordings in the ledgers. Right, guys. Before we go on to our next section, guys, I will just allow 2 questions. Anybody that want to ask a question at this stage? There are no questions coming through, so I assume that you guys.
Sir.
Okay.
I just wanted. I didn't see where you get the cost for the old vehicle. Yeah, the 220,000.
The 220,000. Okay.
Yes. Yes.
Okay. All right, Rutendo, let me just quickly explain that to you. Just mute your mic for me quickly.
Okay.
Right. At the beginning of the financial year, all the vehicles together was 360,000 rand. Okay. During the course of the year, we sold one vehicle, and that vehicle has cost us 140,000. So the vehicle that is still left since the start of the financial year, after we sold this one now, is 360,000 minus 140,000, and that is the remaining vehicles of 220,000. I hope that is clear to you, Rutendo. Right,
yes,
guys,
thank you.
There are no, okay, all clear? Any other questions, guys? One more question.
Morning, sir.
Good day to you. Continue, Guyani.
Thank you. So I just want to ask, when it comes to that 140,000, while you were calculating your, I think that was your adjustment number 3, right? And then you came up with a profit of 9,000 rands. So can you take me through that step once more? Because I did get the calculations of 21,000 rands, but I'm lost to how did you go about when you got that 9,000 rands? I did get that 69,000 rand also, but I just need that profit of 9,000 rand. Can you go through that
All
step
right,
again?
all clear. Okay.
Thank you.
Right, Guyani, let me just quickly show you that one.
Thank you.
You say you've got all of these calculations. So let me take you back to that page over there. We focus now on the 1st of October. On the 1st of October, the asset that we are selling had a cost price of 140,000. Accumulated depreciation is 69,000. Now you must calculate what is the carrying value of the asset. Now, carrying value is cost minus accumulated depreciation. Cost of 140 minus 69,000, giving you a carrying value of 71,000. That is the real value of the asset on the 1st of October. Now, that asset with a carrying value of 71,000, we are selling for 80,000 rand. We're selling it for more than the carrying value. Therefore, we are making a profit of 9,000 rand. Okay. All right, Guyani, I hope that is clear.
Thank you, sir.
Okay, right, guys, we are continuing with the last part of the question. Remember, for exam purposes, I told you that they can ask you to do journal entries. They can ask you to do the ledger accounts. And a popular question, guys, is that they can ask you to do the note for property, plant, and equipment. The note for property, plant, and equipment. So let us just go through this note, guys. And once again, guys, you can check most of your exams, your last exams, guys. You will see that the note for property, plant, and equipment comes up 80% of the times. You must be able to do this note. So in the note for property, plant, and equipment, guys, you will have a column for each of your non-current assets. So you will have a column for land and buildings, a column for equipment, a column for vehicles. For each one, you will have a column. But in our example that we are looking at now, guys, we are only going to work with the vehicle account, only vehicle account. So all the information of vehicles you will have to indicate into that column. Right. So this note, guys, consists actually of 3 items, 3 sections. The first section here deals with what is the situation in the books of the business at the beginning of the year. The second section, under the heading for movements, is you want to know what is happening during the course of the year. And the third section of the note deals with what is the situation in the books of the business at the end of the financial year. So we take a look at the beginning of the year, during the year, end of the year. Okay. So now, at the beginning of the year, we want to know what is the carrying value at the beginning of the year. And remember, carrying value is cost minus accumulated depreciation. So I'm going to fill this now in immediately. So at the beginning of the year, my cost was 360,000 Rand. That was the cost price of all my assets. Accumulated depreciation at the beginning of the year. Accumulated depreciation at the beginning of the year, 104,000 Rand. That is the opening balance of vehicles. That's the opening balance of accumulated depreciation. My carrying value at the beginning of the year, guys, will then, of course, be the amount of 256,000. Carrying value is cost minus accumulated depreciation, 256,000. Okay, all clear on that one? That is my situation in the books at the beginning of the financial year. Now I'm going to take a look at my movements. And movements refers to what has happened during the year. What are the changes during the course of the year? There can be additions, there can be disposals, there can be depreciation. Right. So let us take a look at additions. What does additions mean? Additions means, did we buy anything new during the course of the year? And you will recall that on the 1st of July, we bought a new vehicle for 160,000 Rand. And that will fall under the category of additions. My additions, therefore, is 160,000 Rand. Right. Next item, under my movements, we want to know, were there any disposals? And as you guys know, on the 1st of October, we sold an asset. So we had disposals. But we need to show our disposals now at the carrying value. We need to show what is the carrying value of the asset that we sold. You will recall that the asset that we sold had a cost price of 140,000 and accumulated depreciation of 69,000 Rand. So we sold an asset, and that asset had a carrying value of 71,000 Rand. Okay, guys, the same explanation that I had earlier to that one student that wanted to know where the 71,000 Rand was coming from. That was our disposal. We sold an asset, and the carrying value of that asset was 71,000 Rand. We also want to know what is our depreciation expense for the year. Remember our depreciation expense now for the year, it was the 44,000 Rand on our old or remaining vehicles. We also had 21,000 Rand of depreciation on the asset that we used for a further 9 months, the one that we sold. And then there was depreciation on our new vehicle, which amounted to 16,000 Rand. And if you want to know what is your depreciation expense for the year, your depreciation expense for the year, guys, was the amount of 81,000 Rand. We show that also in brackets, 81,000 Rand. So guys, movements refer to what has happened during the course of the year. During the course of the year, you can have additions, disposals, and the depreciation. Guys, I cannot emphasize the fact again, guys, you must know the format. You must know these items down here. Okay. So during the course of the year, we call that the movements, additions, disposals, and the depreciation expense. We've done all of these calculations here already, guys. Okay. The last section of this note deals with the carrying value at the end of the year. And the carrying value at the end of the year, we want to know what's the cost at the end of the year. What is your accumulated depreciation at the end of the year? Just go back to your ledger accounts, guys. The vehicle account. Take a look at the vehicle account. The balance of vehicles at the end of the year. What we close off with vehicles. That is the closing balance of vehicles at the end of the year. What we will start the next year with, that is the closing balance of vehicles. So your vehicles at the end of the year was the amount of right, guys, are you with me? Okay, let's just quickly see what happened here. So let us just get back to that, guys. And the cost price of your vehicles now at the end of the year, guys, is 380,000 Rand. 380,000 Rand. The next thing that we are looking for is our accumulated depreciation at the end of the year. I'm taking you back to your ledger account. And my accumulated depreciation at the end of the year is 116,000 Rand. Put that now into your note. Accumulated depreciation at the end of the year is an amount of 116,000 Rand. So I have now calculated my items, guys, at the end of the financial year. And at the end of the financial year, I've got my costs. I've got my accumulated depreciation. I can now calculate now what is my carrying value at the end of the year. And my carrying value at the end of the year will be the 380,000 minus 116,000. And that will give me an amount of 264,000 Rand. 264,000 Rand. So, just to summarize this note now here, guys. The note in itself, guys, consists of 3 sections. We want to know, as far as the asset is concerned, what is the situation at the beginning of the year? What is the situation? What happened during the course of the year? And what is the situation at the end of the financial year? At the beginning of the year, we want to know what is the carrying value at the beginning of the year. And carrying value at the beginning of the year is the cost at the beginning of the year minus accumulated depreciation at the beginning of the year. Movements, what happened during the year? 3 things can happen. You can either buy items, or you can sell items, and the items will decrease due to depreciation. So you must show the impact on your asset during the course of the year. We call that additions, disposals, and depreciation. Then we take a look at the asset, the value of the asset at the end of the year. We want to know what is the cost, what is accumulated depreciation, and the cost minus accumulated depreciation is your carrying value at the end of the year. So we want to calculate what is our carrying value at the end of the year. And that will take care, guys, of the note then for property, plant, and equipment. So just to summarize, guys, what we've done today, in today's lecture, we have focused, guys, on study unit number 11, which deals with property, plant, and equipment. With property, plant, and equipment, guys, you must be able to deal with the transactions where you are selling an asset. We call that asset realization. When you've got asset realization, guys, you must follow the 5 steps with asset realization. Let me just emphasize that again and repeat that. Step number 1, you transfer the additional depreciation. Step number 2, let me just get back. Step number 1, calculate the additional depreciation. That is the depreciation between the beginning of the financial year and the date of the asset realization. Then you take the accumulated depreciation on that asset that you are selling and you transfer that to the asset realization account. In step number 3, you transfer the cost price of the asset to the asset realization account. In step number 4, you take a look at how did you dispose of the asset. Was it for cash or on credit, or did you trade it in? And in step number 5, you calculate whether you have made a profit or a loss on the asset realization. Okay, guys? So that will be your summary then of asset realization. As far as your exams is concerned, guys, they can ask you a question to do the ledger accounts. They can ask you to do a question on the journal entries, and they can ask you to do the note for property, plant, and equipment. We have worked through the entire exercise, guys, where I've showed you how to record the entries in the journal and the ledger, and I have also showed you the note for property, plant, and equipment. In your notes, guys, there is another question that I am going to do. I thought that we will have enough time to do that, but we will not have enough time. So I want you guys to do this for me as a homework activity. And when I see you guys again, I will work through this question with you. It is the November 2013 paper, guys, and in your notes, it is on pages 6 and 7. Go to your required on page 7. On page 7, 3.1, they ask you, prepare the property, plant, and equipment note to the financial statements of bonsai traders for the year ended the 31st of December 2012. The total column can be omitted. And under 3.2, they want you to do the statement of financial position. I want you guys for homework, only do 3.1 for me, only 3.1. And 3.1 is where you must prepare the note for property, plant, and equipment. So to do this note, guys, under your additional information, just mark this for me, guys. Under your additional information, take only into account the following additional information: number 5, number 7, and number 8. Only 5, 7, and 8. Under number 5, equipment with a cost price of 8,000 Rand was purchased. And then under number 7, on the 1st of September, a vehicle with a cost price of 5,000 Rand purchased on the 1st of January 2009 was sold for cash. And under number 8, they gave you the different rates of depreciation. So guys, please, I'm not going to send you the solution. We will discuss this next week. In our next lecture, we will discuss this now. So I want to give you guys the opportunity to work through this question and see whether you can do it. And then I will discuss and give you the solution in our next lecture. Right, guys, this is the end of this lecture now. I will just allow 5 minutes, guys, for any questions that you've got at this stage.
Hello, sir.
Right, you can go ahead.
I just have a question regarding the homework that you gave us on question 3. For adjustment 5, where it says installation cost of 1,500 Rand was incurred, does that have any effect on asset realization?
Okay. Right. Brendan, let me just quickly answer that to you. Right.
Thank you.
Under your additional information under number 5, we are buying equipment. So it can't be asset realization because asset realization only deals with the sale of equipment. However, what is important, and I think this is what your question is, if you are buying equipment of 8,000 Rand and there was installation cost of 1,500 Rand, that installation cost is part of the cost of the equipment. So, number 5, if you bought equipment for 8,000 Rand and you had to pay 1,500 to install that equipment was actually purchased for 9,500 Rand. Okay? And I think, Brendan, that is your question.
Yes, thank you.
Okay, so the equipment was purchased for 9,500 Rand. The installation cost must be added to the cost of the equipment. Right. Anybody else, guys?
Thank you.
Any other questions, guys?
Good day, sir.
Okay.
I
Cisco, you can
was
go
wondering if you could just show me the T account for the depreciation with the profit and loss account thing you said.
All right. Okay. Guys, I think what I'm going to do is I'm going to send you the calculations, guys, so that you can see where this is coming from. But let me just answer Siska's question quickly and go back to the depreciation account. When we had our asset realization on the 1st of October, we accounted for the depreciation on the asset that we sold, and that was the 21,000 Rand. On the 1st of October, debit depreciation account, 21,000 Rand. Then on the 31st of December, we must debit depreciation again with 60,000 Rand. That's 60,000 Rand, guys. Remember, we've worked out the depreciation expense for the year was 81,000. 21,000 we have already recorded in the books of the business on the 1st of October. The 44,000 and the 16,000, which will give you the 60,000 Rand, you will only record that at the end of the financial year. So if I go back to my depreciation account, There's a 21,000 that I record on the 1st of October. There's a 60,000 rand that I record on the 31st of December. So my expense is 81,000 rand. Depreciation is a nominal account, one of my expenses. At the end of the financial year, if I don't balance this account, I don't take depreciation into the new year, I close it off and credit this account with profit or loss account. And the amount is 81,000 rand. Okay, Siska, I don't know whether that answers your question. Right, guys, any other questions before we close off? Right, guys, just a reminder that you will get information as to when our next session is going to be. I want you really, guys, to sit down and see if you can do that question so that when we work through that question, that you know exactly where the amounts are coming from and so that you can know where you have made your mistakes. Just a reminder, guys, also to complete the feedback form, please, and send that back to us. Siska, is there a question?
Yes, sir. I just have a question on last week's session. There you gave us to do also as homework, and I was wondering if you will just send us the answers of that.
Okay, I will send you then the answers then also of lecture number 7. That was the bank reconciliations. I will send you the solutions of that, and I will also send you guys the workings of today. Okay.
Thank you very much, sir.
Right, guys. Just guys, in closure then, please complete the feedback form and forward that to us, and we will inform you as to when our next session is going to be. Enjoy the rest of the day, guys. Good morning to you. Bye.
Sir?
Yes, Brandon, is there a question?
Yeah, sorry about that. I just quickly noticed on the note for property, plant, and equipment. I just wanted to run it by you. The carrying value at the beginning of the year, if you take that 256,000, and then you add and subtract everything under movements, it will give you the same carrying value.
You must get your carrying value at the end. That is a proof to you that you have worked correctly.
That is right.
All right.
Okay, so it would balance. If you've got it right, it should balance both sides.
If you have worked correctly, your carrying value at the beginning of the year, plus or minus your movements, you will plus additions, minus disposals, and you minus depreciation. You must get the carrying value at the end of the year.
Okay.
Okay.
Thank you.
All good?
Yeah, thank you very much.
Okay, Brandon. Okay, guys.
Thank you, sir. Good lecture.
Hi guys, anyone knows where I can get the form to fill in? Anyone please?
So we don't come down the balcony. See, we need to get. Oh, like attitude.